And welcome back in to Eye on Agriculture. I'm Britton Rucker. Today we're taking a look at the cattle market and what producers can expect heading into the new year. Joining us now, OSU Extension Livestock Marketing Specialist Derrel Peel to break down current market conditions, the impacts of reduced packing capacity, and what it all means for prices moving forward. Derrel, what's the current overall temperature of the U.S. cattle market right now?
You know, the fourth quarter, we've seen a significant correction in cattle markets. A lot of the external focus on the market, a lot of political focus has impacted the market. So we've seen a significant correction in prices this fall. And unfortunately, it was coming at a time in the fourth quarter when a lot of producers were marketing calves and so on. So it did impact some producers fairly significantly.
So how are cattle prices trending as we close out the year?
You know, as we get into December here, we're kind of stabilizing from this correction. I do expect to see some recovery, and I think we're starting to see some of that. Some of that recovery will happen in December. Some of it, I think, will probably carry over into the new year. So we're going to see these markets bounce back, again, depending on kind of what the external influences are on the market.
Yeah, let's talk a little bit about how producers are feeling. Are producers still feeling the effects of historically low cattle inventory levels?
Oh, yeah, the overall market situation where we are is really driven by the supply side in conjunction with strong demand. But, you know, cattle inventories are still low. And, you know, even with the correction we've had in the market, we're still well above where we were this time last year. Again, once this market picks back up and sort of gets back to focusing on the fundamentals, I do think we'll pick up and continue on from here. In terms of a reflection of where those cattle numbers are and what we're looking for going forward.
Now, Derrel, a lot of people are wondering kind of what's driving this. In your opinion, what's driving the supply and demand balance in the beef industry at the moment?
Yeah, it's really a combination of this supply side, which is extremely supportive. You know, again, we have multi-decade lows in cattle inventories. Cattle numbers continue to tighten, and we're really just seeing that work its way through from feeder cattle supplies, which are very tight. And, of course, we've had some additional disruptions with the Mexican border closed, for example. But then that works its way through feedlot inventories, which are continuing to decline. That leads ultimately to lower beef production. All of that is very supportive from a supply standpoint. And at the same time, we've had remarkably strong and resilient beef demand, even though we're at record high prices for beef in the U.S.
Now, as always, Derrel, I'm going to ask about your crystal ball. Looking ahead, what should producers expect in terms of cattle prices in the next 6 to 12 months?
You know, as scary as it is to say it, I mean, we've had record high prices in 2025, even though we've had a correction in the short run. I do expect this market to bounce back, again, based on the fundamentals. And so overall, we're expecting higher average prices in 2026 and probably carrying into 2027.
Well, Derrel, as always, thanks so much for coming on the program and chatting with me. Everyone stick around. All right, we talked a lot more. To see our full interview, visit the Eye on Agriculture section. It's streaming right now on your apps.